Okay, we're going to continue in Chapter 4, and I want you to be very cognizant of the fact that when we're talking about the general fund, and you saw this on your first multiple choice test, multi-chapter, you're going to see it on your second and third test as well. Remember that GASB requires that each government fund entity have one general fund. It's required, and they can only have one general fund. Memorize that. Okay, in this chapter we're looking very closely at the general and special revenue funds. You can use the Wake County Public School CAFR, the Comprehensive Annual Financial Report, to take a look at examples of the general funds. In the notes that I published in Blackboard, I give you the page numbers of the CAFR. You can also look at Wake County government. You can look at the City of Raleigh or another municipality's CAFR to see examples. If you're looking at special revenue funds, you can look at the, for special revenue fund example, is the state funds that are provided from the state of North Carolina to Wake County Public Schools. That will be considered a special revenue fund, and that is listed in the CAFR. Now, another thing I want to emphasize that's really different about the general and special revenue funds, governmental funds, is that when fixed assets such as equipment are purchased, that you need to debit the entire expenditure amount of the cost in your general ledger system. You're not going to put it as an asset on the balance sheet. You're going to debit your entire expenditure cost. You'll credit cash, okay, when you pay for that asset. In financial accounting, we studied about depreciation, putting the asset on the balance sheet and depreciating it over its useful life, or allocating the cost through depreciation. We expend the entire amount, we realize the entire expenditures. And you need to keep that in mind as you progress through the governmental accounting class. Now, the entries, the journal entries that where we start in Chapter 4 are the budget entries. And I want you to remember that we saw these. This is a review from Chapter 3. When you're setting up the estimated revenue accounts, you're going to debit them and credit the budgetary fund balance. Now, your textbook in those journal entries use the term for the credit as unreserved fund balance. I want you to draw a line through that in your book, and I want you to use budgetary fund balance. Later on in Chapter 4, the book talks about being able to use budgetary fund balance, and that is the concept I want you to learn in this class. That's how I will test you. That's how the homework, I'll expect it to come in using whenever a budget entry is set up, the offset either to the estimated revenue or to the appropriation will be the budgetary fund balance. Another concept I want you to be comfortable with is when you're setting up or realizing the revenue for taxes that are going to be collected, okay? What you will do with that, and I've written out this on a piece of paper, and I'll try to put this in camera sight now. You're going to debit the taxes receivable current account, just like any other receivable account, and you're going to credit the revenues account, and you're also going to credit the allowance for uncollectible taxes, This is another way that, or another big difference between financial accounting and governmental accounting. In financial accounting, we had a bad debt expense account. In governmental, we do not have the bad debt expense or expenditure account. We simply reduce our revenues for the amount of estimated taxes that we're not going to collect, and then we set up an allowance for that. So you're going to have a 3-line entry showing the receivables for all of the taxes that are going to be collected. Then you will be showing your revenues that have been reduced for the allowance account. One more thing that we're going to get into in Chapter 4 are all of our encumbrance entries, okay? And we've talked about, and I had a YouTube video in Chapter 3 about setting up the purchase order and what the encumbrance entry looks like there. You're going to review that in Chapter 3, and what I'm also going to do is go through a video showing where how the progression of the entries look like. The first entry, when you set up the encumbrance, when you issue, or when your governmental entity issues the purchase order, and then the entry when you receive the money back, then the entry when you realize the expenditure. So it's really a 3-step process with 3 entries. Also, in the next YouTube video, I'm going to show you how this affects the equation of appropriation, less encumbrance, less expenditures equals available balance. And I'm going to go through the example that is given to you in Chapter 4 in the textbook to allow you to take a look at the different scenarios for this entry of encumbering the money for the purchase order and receiving the merchandise, which is a different amount. So it's going to be a little different nuance of the situation than we experienced in Chapter 3. So tune in for that video coming up.